Joining me now, Steve Forbes, Forbes Media chairman, to break this all down. Steve, as always, great to see you. Thank you so much for joining us tonight.
Thank you. Good to be here.
Let's go ahead and dig into these jobs numbers. First of all, the president says he's created 10 million jobs. Well, it's people getting back to work after the pandemic. He didn't create them. Actually, they went back at a slower pace as a result of his policies, but we'll leave that aside for a minute. Let's talk about this number because the stock market was down. The Dow was down 630 points today. It was one of these numbers. It wasn't great. It wasn't awful. This was all a reaction to what the market thinks the Fed will do, and being that this was an okay number, the anticipation is that the Fed will continue to hike rates to combat inflation. Your thoughts?
Well, that shows how sick the thinking is today, that markets take comfort in an economy that is weakening. That's what gave us those two great days on Monday and Tuesday, 1,600 points, was the fact that people felt if the economy was visibly weakening, the Federal Reserve wouldn't turn the screws even more. This jobs report sort of, because it was so middling, job openings went down 1.1 million. That's a sign the economy's starting to waver. But it was not enough to deter the Federal Reserve from raising interest rates artificially yet again next month by 75 basis points. Unfortunately, the Federal Reserve believes the only way to fight inflation is by depressing the economy, tanking the economy. And that's not good for earnings. And I think the markets are beginning to wake up again. A bad economy is not good for the bottom line.
Yeah, and you look at that unemployment rate number, 3.5%. It ticked down after it went up last month. I always like to just focus on this for a moment because what happened is labor participation went down. When labor participation is actually going up, that's a positive sign. So that's a little misleading, and sometimes people will just open USA Today, right, and see that headline number and say 3.5% unemployment. Things are great.
Well, they're not great. We've mentioned what's happened to wages. They're still not matching inflation. People are having to work overtime more and more to try to get their net pay to what it was before these price increases in real terms. And so that situation is not good. And you still have several million people who, for a variety of reasons, are not going back into the workforce. And I think what you're going to see a combination of in the next few months is that the economy weakens. A lot of those job openings, which you just saw the beginning of, are going to disappear. And we're going to have a situation where people are going to be once again searching for jobs rather than employers searching for employees. And
that's the crucial tipping point that the Fed will be watching closely for. Obviously, the market didn't think we're at that level just quite yet. But we talked about gas prices. Grady Trimble set it up for us. Oil was higher than $93 a barrel today. This is after OPEC essentially said, we think demand's going to fall. We want to keep prices high. So we're going to cut production by 2 million barrels a day. And this is an administration, Steve, that keeps, going around taking victory laps on gas prices. Listen to this.
It is the fastest decline in gas prices that we have seen in over a decade.
You saw the president act so aggressively to bring gas prices down, make it easier for Americans to afford gas.
In the month prior, gas prices had come down by a very significant amount.
Gas prices are down $1.30 a gallon.
Yes, we're seeing gas prices down over $1.30.
Well, they're going back up, Steve.
Well, this is what's so ridiculous, and this is why this administration has so little trust by the American people and why the president's ratings are starting to decline again. Yeah, they went down because they went up so much from what they were when he took office. Inflation was 1.5% when he took office. Now it's about 6 times, 7 times that, probably more in the real marketplace. And so when they do these things, people just wonder what world they're in.
Yeah.
And again, the real danger is the Federal Reserve explicitly says it wants less economic activity. The economy now is hardly booming. We're stalled in the water, and the Fed wants even more pain out there. There are better ways to fight inflation, removing obstacles and barriers to production, and stabilizing the value of the dollar, which is what we did in the mid-1980s to the mid-1990s, had a great run.
Yeah.
But unfortunately, both the Fed and the federal government, the White House, are doing the opposite of what they should be doing. And I'm surprised the market did as well as it did this week because the Biden administration is not changing policies. And how is it that they're now begging Venezuela, a communist country, now to give us some heavy crude oil, and that crude oil is not good for the environment?
You're
bizarre
absolutely right.
for
You're absolutely right. And to your point about the market, that it did hold up surprisingly well, I would just say buckle up, because there is more volatility to come. The American people are going to suffer from gas prices going up, and they are also going to suffer when that tipping point comes and the jobs are not there. Steve Forbes, great to see you. Thank you so much, sir. Have a good weekend.